Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is ECB Thursday, October 26th. Michael Boutros here with you this morning, guys. Good to be here. DJ, Iman, John's in the house. Kelly's back here. Pete, Peter, Pooja, Rizwan. Great to see everyone here. Alan, always a pleasure. So, no change, obviously, the benchmark interest rate. They did announce the reduction of QE purchases from 60 billion to 30 billion starting in December, which will go for 9 months. You're seeing the dollar with a really, or the euro rather, with a really stern pullback here. We'll go over the implications of what's going on, guys, on that. DXY, obviously, pound, Aussie from last night, from previously in the week. We'll take a look at dollar CAD, which has been kind of boring over the last day. Kiwi and dollar yen. After that, we will cover everything we covered earlier this week. Pound yen, pound Oz, the crude trade, which just came into resistance, pulled back a little bit. That outlook remains unchanged, though. Dollar peso did turn after a brief stint above resistance. So take a quick review on that. Dollar Swiss, obviously, also at the top side break, and euro yen still holding near-term resistance. If there's anything I didn't mention that you would like to cover, or if you have any other questions throughout the course of the session, as always, guys, feel free to throw them on the message board at any time. Okay, where should we start? Do you guys want to do dollar index first, or should we hit the euro right away? Let's do this. Here's what's going on with the euro right now. So obviously, from the swing side of things, we want things to hold above 117.20. So we're hoping to see this downside hold. A couple of things I wanted to note, guys. I was looking at this morning. These economic releases, obviously, devil's in details. We still have the commentary from Mario Draghi, which will be coming out throughout the course of this webinar. I'll be giving you highlights. Draghi reiterates actually that the present level is well past QE horizon. Rates expected at present levels for an extended period. And I'll give you highlights as he continues to talk. But at the end of the day, it's really the reduction in this balance or the asset purchases, which was largely expected by markets. Okay, from 60 to 30. We actually talked about this earlier in the week, guys. Does it make a difference if they do 60 for 6 months or 30 for 12 months? It's net is going to be the same as far as input to the market, but we'll see what kind of cues traders are taking off that. In price action, here's what the euro looks like. Well, let me show you what it looked like last night. So, the premise of the trade, I wanted to show you the weekly chart. Again, we have a lot of support right here. This is the 50 line for the current operative structure. This is off the 2015 and 2017 lows. So that highlighted along with that former 2015 swing high, right around 117.14. Get deeper into the daily chart, you also had this near-term slope off the lows. That comes in a little bit lower at 117, okay? But again, we saw a nice opening range low right into a basic 236 retracement, and we're looking for a break of this range. On the intraday, we said here's the levels, okay? Top side resistance on the near term is 118.30. I'm glad we were chatting just ahead of the webinar here. She was able to get into a short from that level. That was the near-term resistance. I didn't really think we were going to get that far, quite as low as we're getting right now, but I'm going to show you the levels in a second. This is still the main range, in my humble opinion, on the near term that we really need to focus on. So even if we break the weekly opening range low, that 117 would still just be a basic 100 extension off that high and the broader slope support at this point. Positioning is very interesting. You might have seen Jamie post something just earlier on Squawk, SB Squawk, that we want to be very cautious, guys, and respect our stops. If the stop is given out, something bigger could be awry here if we do break below this threshold specifically. I mean, just looking at position again this morning, here's a sneak peek, guys. This is actually IG's client positioning. And looking at this, I just wanted to highlight that over, the last day or so, you've seen a dramatic increase in retail net short exposure and a dramatic decrease, okay, in the net long positioning. So what does that suggest? You're seeing that there's a mass sentiment shift back to the short side. It's something you want to be mindful of. Okay, it's something you want to be mindful of. So I'm not going to really advocate trying to chase this lower. We have to remain objective, based on everything that we highlighted earlier in the week, all those support barriers, here's the live charts. We're still above the median line. We're still above that key threshold. Again, that's 1680, but even on the near-term front, this would be an objective break of the monthly opening range low. So 11680 is the validation for the reversal. But even near term, if we do scrape below those lows, I would be mindful of the 17 handle, 1708 possible area for still near term support. If you're holding shorts, a limit, or you want to bring your stop rather down somewhere around 117.87 if you can at this point. And again, have a very close eye on this as it heads down here into the weekly opening range low, and then specifically that 117.80 level. I'm very interested to see what price action does there if we get there. Hopefully this thing starts to hold its footing here and start to move higher. Remember, at the end of the day, there's no material shift here that we've seen yet. Some more comments coming on the wire. It says Draghi continued monetary support provided by additional purchases, stocks, and reinvestments. Ample degree of monetary stimulus is necessary. Domestic price pressures still muted. Economic expansion continues to be solid and broad-based. So, this is what central bankers do, guys. They're talking on both sides of their mouth. Let's see here. Remember, as you think at some of these comments that are coming across the wires, it's not in their best interest to see any further euro appreciation. So, one of the things that they're going to want to do, even though there's not that much shift in policies, they're going to want to talk down the strength of the euro because, again, that's just an added tailwind if we do see euro depreciation. I'm not seeing anything here necessarily that shifts the broader outlook for monetary policy from the ECB. Again, we got the release of the asset purchases earlier in the day, guys, so the markets already reacted to that. Private consumption underpinned by rising employment data survey point to unabated growth momentum in the second half. Economic expansion continues to be on solid and broad-based. Okay, so saying that we're still going to keep things rather loose as far as policy is concerned, but the outlook does remain on solid footing. It says economic expansion looks good. Rising employment seems solid. Unabated growth momentum is good for the second half. So again, very cautious type of commentary coming out from Draghi. I'll keep you updated on that, guys. I want to stay focused on the trades here. So any questions on euro? So the broad base, again, my base case scenario, I want to see this thing start to settle. Hopefully we don't get stopped out on the swing, but even if we do, sit tight. Let's see what kind of reaction here. The daily close will be very telling today if we're able to manage a close above 117 or not. Below 117, I'd be very mindful of trying to chase this. But with those key support barriers, both on the intraday and daily and weekly, okay, it's gold, and weekly, I'm very mindful of trying to chase this any lower. Okay, so for you, D, I think you said you were holding a short, right? Just be mindful of these levels. The weekly low, 1725, 1708, 100% extension, median line support. If we kind of rush through that, look for a close below 1780 and 1680 rather, and that's the validation that this whole thing has shifted. Again, that's not my base case scenario. Looking at this on the flip side, let's take a look at the dollar index here. So that was euro number one. Let me know if you have any other questions on that, guys. Looking at dollar index, it's basically staring down the same scenario. Remember, here's what the index looked like last night. Kind of what I wanted to highlight was this near-term slope that we followed and highlighted earlier in the week. We talked about the resistance barriers stacked between 94.03 and 94.20. There's tons of stuff up here. And if this holds or if this breaks, that's sort of the near-term pivot that we need to respect, keeping in mind that the monthly opening range objectively is there as well. So, yesterday I noted that this slope was here. We could see a little bit of a rebound, but at the end of the day, below this key resistance, we want to stay bearish. Immediate resistance should have been at that 50 line. Once we plowed through that, things change. Here we are right back into this key resistance zone, 94 into 94.20. So I'm very interested to see what happens here. And again, a condition that's happening not only on the near-term charts, but on the daily charts. Okay, there's your August high, 100-day moving average, 236 retracement, and on the weekly charts. Again, we talked about this longer term slope resistance. We've tried to poke through it 3 times just over the last few months. So the close of this weekly candle will be paramount. And if it does break, you're looking for a rally somewhere into just shy of 95, 94.90s. We talked about this yesterday. That nice pivot that we've been working with. This is a basic trendline slope off 2011. Has been very, very well defined on both the breaks and the pivots. And that comes in just higher, around 94.90. So it gives you another 90 pip rally to the upside if we break and are able to clear this critical zone of resistance. This could just be an exhaustion play. Again, I want to be very, clear about this. It really will depend on how the U.S. markets open and if we're able to mount 94.20 on the dollar index, and more specifically, that 117 handle in the euro. As long as those two levels hold, guys, none of our biases change. You're still within the upslope in the euro, you're still within the downslope in the dollar, and at the end of the day, we have to be disciplined. Okay, we have to remain, especially in these time periods. It's very, very simple to get caught up with all the commentary. And if you're looking at Twitter, first of all, you want to be very mindful of who you follow because there's a lot of junk and noise. But if you're looking at that, I mean, even, the news agencies are going nuts and jumping around. But at the end of the day, our focus always needs to be on price action. Any questions on the euro or the DXY? Okay. So we'll see how this opens to U.S. markets. If we spill lower, key support, index, key resistance. So no change to any of the levels from yesterday. Again, here's what it looks like on the 120. As always, guys, if you need to take a snapshot at any time, feel free to click that camera button at the top of your GoToWebinar screen if you want to review these throughout the day. Okay, that's 1 and 2. Dollar index. Going once, going twice. And what the heck is going on with the pound? Here's what sterling looked like last night. And we were coming into resistance, and we noted that we could get a pullback off this region. But yesterday, it's interesting because if you look on the IDX feed, it's not quite an outside day reversal on the intraday, but it does show on the daily for some reason. So I didn't want to stress that. But the reversal candle here takes us right back into that near-term resistance barrier. This is a longer-term 1618 extension. It was also the high that we made in July. Okay, kind of probed through it here. We closed or pushed right into it yesterday. So looking at this on the intraday charts, we were at resistance. You'd look for the pullback to find some support near the weekly open, but at the end of the day, above this slope seems pretty solid. Okay, remember, this is one of these trades that we haven't visited in a while, sterling, because we got a whole lot of chop on this drop here that got a little bit deeper than expected. So I do want to stay constructive. Okay, here's the intraday chart look like. Do want to see constructive. Yesterday, that reversal day took us right through the objective weekly opening range high. Should be looking for a late week high, right? Well, sterling's been kind of heavy today. Okay, here's the pullback. Here's the weekly open. And in fact, that is where we're finding some near-term support. So even just like same thing with the euro, even though you're seeing this kind of rush, right? Don't get caught up in the panic. We want to stay focused on what price is saying. And at the same time, we're coming basically into just near-term support. In-term support, the weekly open at 131.84. It's basically what we tagged. We got as low as 131.81. So I'm inclined to still stay constructive, guys. Even the momentum signature on this one shifted yesterday. Since that decline from the mid-monthly high, we went lower. Momentum held 40, that 30 level of support. It was holding 60 as resistance till here. So on the way down, you kind of want to see this thing start to hold above 40. Look for that momentum profile to shift. I still want to stay constructive on the pound. My problem here, guys, is I don't have anywhere to get a decent stop against the money. If I put a stop all the way against 31.13, I mean, it's almost 90 pips. So not my style if we're looking for a near-term type of positioning. Look for some exhaustion here. If we do break through the highs here, the real play that I noted was break here and a pullback to get against this low to try to play that stretch higher. I noted 33.40 and the final target at 33.93 into 34. In slope, you actually do have a 50% retracement here. Longer term, that would take you to 34.80. But right now, I do want to focus on this region. Why? Because 33.39 is the actual monthly open. So, monthly open resistance, 618 retracement. Respect this region if we do move to the upside on a break in the pound. Any questions there? You got some pretty good data this week. Likely that we're going to have to see some sort of minor shift in the MPC as far as their, outlook on rates is concerned, especially if the inflationary picture is starting to pick up. Draghi says we'll continue buying sizable quantities. I'm sorry, didn't discuss asset purchase composition, underlying inflation in euro area. It's cutting off some of the commentary here, so hold on with me one sec, guys. Measures of underlying inflation have moderated headline rates of inflation to temporary decline. We'll continue buying sizable quantities of corporate bonds. Okay, so a lot of questions were actually going into were with regards to what else they can purchase. They're actually running out of options. Underlying inflation in the euro area is expected to continue to rise gradually. Inflation have moderately increased, but lack of sign of sustained upward trend. So they're saying that inflation in the near term looks like it has began to moderate, but lack of sign of sustainable upward trend. So they don't see that the strength that we could see in near-term inflation is actually going to be sustainable. Interesting. Okay, let's just take a quick glance back at the euro, see if we're not making any major moves here. And it looks like we're getting a lift off that. So that's something that you want to pay attention to, those types of comments with the outlook for inflation. Again, the main objective target. And certainly one of the reasons they haven't been able to normalize as much is because they need that inflation to start to pick up. So interesting. Okay, keep you updated on that. Let's see what this looks like on the 30-minute real quick. Not bad reversal bar. Okay. Any questions on either of those? Moving right along. So for the British pound, looking to see if we can find some support here. Same thing as the euro. I do want to stay constructive above yesterday's low, like I said. A breach above 32.70, 33.40, and 33.90 into the 34 handle. Big region, just near term, significant technical considerations to keep in mind. Okay, that's number 3. Number 4, Aussie. Well, it was a steady and slow decline, but we did come into a level of significance that we noted last night that could see a little bit of a pop. Okay, here's what Aussie looked like last night. So, we were looking for confluence support down here at 76.76. That's the 2618 extension. I think that Pooja, actually she's in the room here today, that helped us pick out yesterday, right? That 2618 off the low. Either way, it is actually a beautiful touch of near-term confluence median lines. The first one being just the 50 line for this broader structure here. Okay. So really nice on the 50 line, boom, boom. And then that longer term slope in red. That's what's here on the daily chart. What is that? Basic trendline resistance off the 2016 April high. Tagged once, twice, that's confirmed. 3 times, the break saw massive acceleration on the way down. You got the 200-day moving average there. You got the 50 line that we just talked about. And then you also have basic trend line or slope support off the yearly lows that we made back in May. Not the yearly lows, but the May low. This slope that you see in red, and again, let me just bring this to a full chart so you can see it clear. This slope that you see here in red is just a parallel of the pitchfork that we've been following for quite some time now. So again, decent area of confluence support. Now you might be asking yourself, Mike, this looks like an objective range break of the monthly opening range. True, true. So what we should be looking for is a late month low. Well, we've only got a couple of days left on the month. We're coming into a nice major near-term support barrier. And again, one of these charts where if you take it out to the weekly chart, everything starts to look a little bit clearer. Breach of resistance, check it as support, move higher. Possibly. I don't know. All I do know is that I'm very focused on this drop. So we're testing the initial trend line here. I wouldn't put it past this thing to see a further push lower into 76.30, 76.29. You have a 38.2 retracement of the advance off the lows from 2016. You have the 618 retracement from the advance off the lows from just this May low, and the 52-week moving average all converging right there. Okay, alongside some other slope that we've been following, and basic trendline support off that low. So there's so much loaded up here. Moral of the story, if you're holding shorts on the Aussie, areas of which you want to start to look to maybe to clean that up a little bit. Okay, and in fact, if we were to get that one last spike and push lower into 76.30, I'd be looking for exhaustion. I'd be looking for long entries if we get into this zone down here. For now, here's what the intraday chart looks like. Okay, so you can see a perfect touch of that last night. We're getting some pretty strong kickback off the highs, so I'm still not interested necessarily in trying to fade this. Momentum would have to get back into the back from oversold conditions for me to get kind of comfortable taking a stance against this downtrend. But really, I mean, even on the intraday charts, you know, there's 76.30 again, just a sweet spot. So looking for exhaustion at one of these two levels. Okay, if we breach the overnight Asia highs, that might give us a little bit more consideration that this is the low. But at the end of the day, if we do move lower, you know, be mindful of that key zone of support. The only thing that would put me back on the constructive side would be a break back above the median line. Yesterday, you know, I noted 77.78 based on where we were in time. It was kind of a decent confluence there with some former swing highs. But, you know, just keep your eye on the median line. Questions on Aussie. Some pretty weak CPI data. We talked about that yesterday. Kind of upset this thing, but put our downside bias in play. So the levels and the outlook do remain unchanged. But there is a risk here for a little bit more of an exhaustion play at one of these two levels. Okay, Aussie dollar going once, going twice. Okay, previous update, we had dollar CAD, Kiwi dollar, and dollar yen. Here's what that one looked like. So dollar CAD, obviously the BOC charged a rip. Remember the weekly chart that we had discussed with regards to the longer term slope that we pivoted on both sides. Now that we broke above, it really did keep the focus higher in dollar CAD. I wouldn't, you know, again, even a rally up into 129.30, 129.27, you know, would still keep us in this downslope. But, you know, now that we've broken that longer term, you know, that wouldn't be so far out for a play like that. So here's what it looks like on the intraday. Again, my level of major resistance that I would look for the break was right here at 127.57, 127.32. Okay, basic slope resistance, former swing highs. Intraday looked like this, and boy, did we just plow right through it. Now, once we broke, the problem is that price didn't run, and not only did it not run, we kind of sat there all in an overnight trade session between like a 20 pip range. So, you know, technically it did break it, checking it as support. You still have to kind of look higher. I'm not a fan of chasing this any higher from here and taking a long at fresh monthly highs. So I can't, even from a scalping perspective, get really excited about it. So I've kind of benched this right now. I want to see that rally towards 29.27 again on the daily chart, really highlighted by that confluence 50% retracement, longer term 50 line, and just higher, depending on where we are in time, you have that basic slope resistance we've been following. Questions on dollar CAD. Directional bias remains weighted to the upside. How you play it from here, a little tricky. Objectively, while above 27.57, you want to stay constructive, that August high day close. But it doesn't, with the dollar index doing what it's doing and all these kind of things kind of stretch. I don't want to chase this. If you're already on the long side, a stop below 27.57 is kind of where I'd feel comfortable. Next limit, take a little more off at 28.60, but it's really at 29.27 region that's big. All right, questions on the loonie. It's number 5. Draghi says reinvestment is going to be massive. We didn't discuss parameters, limits on QE. Expect at present levels of extended period rates to be expected at present levels for extended period of time, well past net asset purchases. So no rush to move on interest rates, despite the move that you're seeing in the U.S., with obviously markets largely pricing in a December hike. Draghi guidance to reinvest or guidance on reinvestment is not related to rates. Inflation is still not at our objective. Atmosphere was pretty positive, he says. Our program is flexible enough to adjust. Okay, looks like a bunch of fluff here at the end of the day. So continue to track that. Questions, comments, concerns on Loonie? Going once, going twice, sold. Here's Kiwi, number 6. And I think, Kelly, was that you? Yes. Happy Thursday, my friend. He says, I am sitting quiet as I'm still short Kiwi dollar. Back to see what other trade I will add. Thanks for everything. You're more than welcome. It's always great to see you, Kelly. Here's what it looks like, man. I mean, Kiwi. Here it is. So we actually did highlight this setup on the same day here. Here's what the Kiwi looks like on the daily chart. The thing that had me a little sketched out of trying to chase the low, I'm not sure where your short was initiated. It was a great trade while below 70 was our bearish invalidation level. We literally came right into that, kind of held and jackknifed lower on an outside day. The only thing that had me concerned was that the 50% retracement, which has seen a little play, not too much, along that level, also converged excuse me, on the 618 line. You can see that the 618 line was actually pretty decent resistance. So Confluence had me a little concerned for a bump, but we did want to look for a drop into here, and that's still kind of my outlook, Kelly. I think 68.27, 68.50 is a big zone. That's the low day close for the year. It's the 2016 Open, which has just been, just a radical pivot as is. So I don't know. I don't know if it's going to get down there. It looks like it's kind of losing some steam. If you have it still on, I would have a stop against that big outside candle high. So around like 69.04. Look for a drop into this region. I still think you can get it. Again, there's just not much keeping this thing, really constructive. If you look at the momentum profile and a whole bunch of different time frames, this is just ongoing divergence, right? Now, obviously, these divergent levels, like I always tell you, below 30 are typically your weakest signals, right? But now we're above 30. If you see a couple more points, hopefully we get that last spike into that to fill the limit. But that's my thought process on Kiwi here. That's my thought process on Kiwi. And it's not that I necessarily want to initiate a long down there, guys, but I wouldn't want to be short anymore. I kind of want to trim my short expectation just for the near term. Look, at the end of the day, here's what it looks like. We broke a trend line dating back to the 2015 low. Boom. Tagged twice. Tagged 3 times. Confirms the validity of the trend line. Broken, tested as resistance, and pushed off. I mean, that's just as textbook that it gets. The problem is that we've broken that. We've gotten a decent run, but now we're coming up again on the objective low day close and the objective yearly low. So yeah, you could get a little bit of a kickback off that region. I don't want to be stubborn, but I want to see that stab a little bit lower into that support zone. Kelly, does that make sense? He says, sure does. Love it. Thank you. Hey, more than welcome, man. You too, my friend. I took the short the night the government had problems forming, short at 71.57. Okay, so you're well in the money at this point. It depends on the objective of your trade, and again, everyone's going to approach it differently, Kelly. So if you're in a trade from a level like that, you might want to leave yourself a little more room, even if it does rebound, because it is obviously a firm downtrend. But I'm looking at it for a much more intraday, intra-week type of play. If it shifts above the swing highs from overnight, I wouldn't be surprised to see us visit the weekly open or even the median line again before moving lower. But long story short, still a pretty bearish outlook. Okay, that's what I was looking for. I agree. Thank you. Hey, you're more than welcome. Cheers, mate. All right, so that is Kiwi number 6 on this session. Moving right along. By the way, guys, I don't want to forget. No one should forget. We've been going over all these dollar crosses. The big event risk for the week is still on tap tomorrow. Okay, ECB is all the hoopla, but at the end of the day, we get GDP figures for the third quarter, and more importantly, those core personal consumption expenditure figures, PCE, the Fed's preferred gauge on inflation. That's really what they're watching. So a strong number there tomorrow could really just fuel a topside break above the dollar, really like kind of shift things a little bit. If we miss, the dollar's still below resistance. The dollar's still below resistance. Okay? In fact, we just gapped lower on a pretty nice move lower here into the 9 a.m. hour. And I would assume Euro is well on its way back to the upside. Not bad. Again, why we let price speak, not all the hoopla and all the nonsense that we're watching on the news feeds. We let price speak. So continue to favor that one as said earlier. Here's dollar yen for number 7. This one's for you, D, right? You were talking about dollar yen. Who was that? Yeah, need to look at dollar yen. Am long and don't know what to expect. So again, dollar yen, we got stopped out on the swing side of trade earlier on the dollar yen decline here. We're looking for a turnaround. Listen, here, let me do this. Here's the chart. So by the way, the Kiwi levels unchanged. Unchanged. We basically broke this low and we're hovering just above this target. So let's see if we can't get that last dump. But I'd be looking for possible, near-term exhaustion there. Here's what dollar yen looked like earlier in the week. Okay. A near-term slope off the low. It hasn't been the cleanest slope. I'll grant you that. But the median line still is being respected on the breaks, fueling declines, on the approaches, fueling reversals. So we rallied right back into it, and we literally tagged that, got stopped out again on that swing side, and we moved lower. So where from here? Well, here's what it looks like. Okay, well, let me zoom this out to 240 just so you can see the whole thing. So literally, okay, whoops, we kissed right into that trend line, boom, and then we turned lower. Yesterday, we turned ahead of the objective weekly opening range lows. Okay, so if you're long a D, I'm not sure where you're long from, but at the end of the day, you've just made a simple opening range. You failed to break the opening range high. You tested the opening range low, and it is just that until it breaks. Again, this was the actual range that we had talked about in the previous update. Guys, right into the weekly open on the 22nd, I highlighted this daily chart and said, look, we just gapped above a big level. Okay, look for a break of this range to really give us guidance. You're either going to make it through 1460 and this thing is done. We're moving much, much, much higher. Or, we fill the gap, it breaks lower, and it kind of invalidates the upside bias that we got when we broke there. Because remember, the objective opening range high for the month gave out. So we should be looking higher. At the end of the day, resistance is resistance. So I hope I hope I don't sound like I'm talking out both sides of my mouth. At the end of the day, it's a range. Put a gun to my head, I still would like to see a pullback. So you're long from 113.30. Okay, so I actually got in at a decent level. Current stop is at 1290. I don't necessarily want to encourage you to change your thought process, but for me, I would just be at break even because again, you're getting failure into the highs on divergence. It could turn over from here. You know what I mean? I love the target D 114. 40. That's exactly where I would have it, right in the sweet spot here of this zone. Remember, we highlighted 113.36, 114.60. So yeah, I love that sweet spot as a target for sure. But our inclination to start off the week was to look lower, and nothing's really changed from there. So I would be inclined to think that if you break this confluent zone, you're going to see it drop down into that 1260 range, which is just the objective monthly open, excuse me. And that converges on the lower parallel later here, basically into the close of the month. So let me say this, for the near term bounce, I'm not sure when you got in, you must have gotten in earlier in the week, right? For the near term bounce, let's see what the near term momentum looks like. Yeah, you're seeing 60s hold here. Yeah, it doesn't look too constructive from here. Even on the 15-minute charts, you're getting divergence. I just like to scope out the charts. I don't really like pay too much attention to these, but when you see it on multiple time frames, here's another divergence signal. Higher high in price, lower high in the oscillator. So it looks vulnerable. I'll say that. I don't want to scare you out of the position, but D, that's kind of my interpretation. You have to see a look for a break of the weekly opening range. I would still actually like to see this thing move lower, sub 114.60. That's the same level we were talking about earlier in the week. And I still think below that, the risk is for a little bit more of a pullback. Okay? Biggest event risk comes on tap tomorrow. Okay, with the GDP figures. Big reactor to GDP data, or excuse me, US data in general. Very, very critical. Keep that in mind. Hi, where is the exhaustion level for this abomination pair? Amen. This is the initial level I'd be looking for. If we break through this, there's likely a lot more upside to go. Okay, 115.50, 100 or so pips just shy of would be your first initial objective. But on this, even if tomorrow's GDP figures come out and this thing shoots into this region, I'd need to see a firm breakthrough. Even if it shoots here, this would be an area exhaustion you still could get right along the slope. Make sense, C-Man? Rizwan says, if short here, then we'll stop at 114. Appropriate? No. No, I wouldn't. Let me say this. If you're looking for it from a real near term, yeah, for a scalp, you could do something like that. But you wouldn't want to do 114. It would still need to be against this high. You know what I mean? So it's still a pretty big stop. This is for Rizwan, right? You can't really press it beyond there. If you want to, 114.40 is kind of not, is kind of the resistance region we'd want to take profit, not necessarily something I'd want to put a stop against. There's a big difference between those two things. So at 114, you're still not even against the weekly high, and you're not really against any major swing lows or swing highs. That's just my opinion. A stop like that at 114, right at the figure, right ahead of a major news release like GDP, that's tough. That's tough. If you're going to do that, then you want to leave that stop a little bit further out, definitely at least against the weekly opening range high. Make sense, Rizwan? He says, thanks, Aaron. More than welcome, sir. Okay, so that's dollar yen. Big reactor. Keep those levels handy heading into tomorrow. I don't have any exposure on this, obviously, as just a disclaimer to everyone. But I would be interested in fading some sort of spike into that region, or if we break below this median line on a pullback against this high, I'd like to look for a target down here. Okay, end of the day. That's dollar yen. Let's whiz through these last couple ones. Pound yen looks like this. Here's the setup from earlier this week. And our initial inclination was, the immediate risk for a move lower, but you're looking for long entries above the 50 line, a break above the highs, or this resistance region right here, 150.60. We were looking for 150.96 and that median line. Big resistance up here. What happened? Well, here's the chart right here. We pulled right back. 149.20 was perfect support. We rebounded right off that. We took out the monthly opening range highs. Didn't last too long. That's the concern here. You're pulling right back. I do want to stay constructive this trade, but the yen is kind of the kink in the chain here. So the only thing I wanted to highlight is, basically stay constructive above the median line, which has been a very clean here. And the high day close comes in at 148.40. So this is kind of the zone I want to still stay constructive while above. Ultimately, I do want to see a stretch and at least another test of 152, 151.95. Nice confluence levels there. 38.2 retracement long term and a near term 1618. Both of them converge on the actual median line. So quick look on pound yen. Big swing here, guys. If you're newer to near-term trading or you're just getting involved, not necessarily something you want to use on your first trade, more aggressive, but certainly when it picks a direction, she gives you a nice range. Use it. D says Euro is breaking over 117.70 now. Right on. Right on. You're going to get more jackknife. U.S. market's going to come online, 9:30, start to see this thing. Could probably dribble right back into 1750. So don't get too excited yet. But yeah, we do want to see those lows hold. All right. So we went over pound yen. Pound Aussie was the one that really outperformed. We talked about this setup earlier in the week as well. Here's what pound Aussie looked like on the daily chart. Ultimately, this was kind of my last limit and last sort of major level I was looking to play. It plowed through it, but found resistance just higher at the upper parallel. Interestingly, how that works. And while it did spike on both these last two candles, obviously, on a close basis, was a textbook hold. Okay. So what does that mean? We're going to turn all out bearish? No. Looking for a near-term support spike into support. You still want to stay constructive. This may be the extent of it. I hope not, because I didn't get a chance to do anything on the short past the 71 break. So if we were to get another drop, I'd be looking for some near-term exhaustion here into the U.S. Open if they're going to continue higher. But this looks pretty constructive to me, guys. The daily chart, in my humble opinion, again, says it all. This is a slope off the 2015 highs. Okay, basic trendline resistance. Breakthrough. You have a nice pivot. 2017 open, so the yearly open, 618, and the monthly opening range high and monthly open. Okay, you want me to repeat that, or did you guys get it? It's a huge region. It's a huge region. So the fact that we broke through above this confluence region, I want to be mindful. Whoops. I want to be mindful right here. If we break below, sure, allow for the correction. But in my objective opinion, or I guess it doesn't make sense, objectively, I do want to stay constructive while above the monthly open again. And that's basically 170.57, 170.60. Questions on pound Oz. Top side targets are going to be unchanged beyond that. Look for a soft target at 72.57. We just turned ahead of that. But the next upside level, is going to be that basic and objective 786 retracement. That's 73.32. If the Aussie gives us that last drop into that major key support, 76.30 or so, right? Pound starts to find a little bit more footing after this pullback. Could see some more upside and welcomed upside here in pound Oz. Really is a mover once it chooses or breaks technical levels. So looking higher. Questions on pound Oz? Okay, last couple of assets here before we wrap the room up is want to go over crude. There's really not much of a pending play now. It gave us a little bit of a break and faked us to the upside. I did think we are going to see some more follow through on this break here. So here's the chart that we highlighted earlier in the week. For crude, we just wanted to see, it's a pretty clean median line formation. We got the descending channel line break, tested it against support. We saw that continue higher. And the focus to start the week when we published this was on a break of 51.19 to the downside. It would be a bearish move, or validation for the continuation higher with a move above 52.45 here. And it didn't make it. It kind of just fizzled out. Here's what it looks like. Daily chart still continues to highlight the same levels on the upside right there. It's kind of where we want to see this target on a break. Okay, here it is on the intraday chart. But since the start of the week, it's been kind of boring. Saw that dip. I wanted to get entry here. We didn't get quite as low. Once it broke, we wanted to see a real validation and push higher. Remember, the objective monthly opening range gave out. With the objective monthly open is given out. These are the basic September highs and the April high day close. Kind of would validate us on a move back into 55, 53.90 level. Remember, the yearly opened 53.80 too, so kind of going neutral here. I want to see this thing give out to the upside. Momentum hasn't been all that convincing. Again, you're seeing those divergence, and it's just lacked any clear-cut momentum push here. So objective remains the same. Okay, constructive above basic slope support. And you really need to see a push and validate it close above this region to get the validation for that move on 53.90. Questions on crude? 8, 9, that was number 10. Number 11, real quick, here's what the peso looks like. Another one that we highlighted earlier this week. It was kind of an interesting setup. We don't typically talk about the peso too often, but resistance will be resistance, and when we find it, we're going to highlight it. It was 19, 20, 20. Now, we did probe just higher beyond that region. The high was right around 19, 25.80, but on a close basis was rock solid. It was rock solid. You had the median line, the broader structure we've been following here, and a basic 38.2 retracement, as well as some of these swing highs that we made earlier this year. Here's the daily chart looks like now. Okay, then, now, came right into that region, pushed through, outside reversal day yesterday off of resistance, does shift the near-term focus lower. Now, yesterday in the webinar, we added just a quick look at the intraday charts when we were updating this. And the intraday chart showed us a little bit of a basic near-term support. Touched once, twice, thrice, confirms it. 4 times yesterday. The break here, we're just testing the weekly opening range low. If this gives out, look for that downside move. Look for that downside move. And again, a basic and objective retracement off the low. Let's see. Don't stress 1846, but it seems like it was a decent pivot. So that would be a 236. And this is always a slow burner. So like this kicks it out to like mid-November. But I wouldn't be surprised. Sideways to down. But beautiful divergence into the highs. Looks pretty clean. Looks pretty clean. Draghi says, don't see yet encouraging signs in wage growth underlying inflation. His general picture is of part of the world doing pretty well, quote unquote. Still a large amount of uncertainty. Decision today is an open-ended program. Won't stop suddenly. Watching Spain with great attention. Premature to conclude there will be financial stability risks from Spain's situation. Economic positions justify different monetary policy stances. U.S. recovery is way more advanced, says the Eurozone. Different views on whether end date should be announced. So this is the other thing, guys. They did announce that they were going to move and decline after December their asset purchases from 60 to 30 through September. What's beyond September? Is it, do they cut them? Do they taper more? That's kind of still out there. So he's saying here, not sure that there would be a benefit in giving an end date per se. Decision wasn't unanimous. There were different viewpoints, says Draghi. Interesting. Okay. The bottom line is prudent, says Draghi. Our policy experience has been quite different from the Fed's. Okay, kind of setting themselves apart and not tying them to that Fed outlook, which is obviously in the normalization process. We're talking about raising rates and what they can do to stop or start to begin to normalize accommodative measures. They're saying they're in a very different experience, or their experience rather has been very different, and the outlook also is a little bit different as we are in a much more advanced, quote unquote, recovery. Okay, I'll continue to bring those headlines if anything else hits. Any questions here on peso? So we're checking the weekly opening range low. That's sort of the risk, and that would confirm the break of this near-term trend line. Look for 1884.60 as the initial target. The median line, obviously, that confluence is on the 38.2 further out later this month. Okay, 12. I just want to touch base on dollar Swiss and euro yen real quick. Here's dollar Swiss. So this is one we were just utterly, completely wrong on. We were looking for resistance here. The short worked out for a week. We came here, short worked out for a couple of days before we got ripped on the way up. And then this thing is just off to the races, guys. I mean, both on the monthly and, the weekly and the daily scale, things have changed here. Here's the daily chart that we were talking about. The weekly chart that we've been looking at. If the weekly close, obviously this doesn't matter until we get the weekly close, but if we are able to close above this 98.76 barrier, it changes things, period. Again, we've been looking at a basic opening range break for the year, kept us looking lower. A double bottom measured objective move, a conservative measured move of the short side of the end, takes this up into 101.07 if this is to confirm a break. So I'm not touching dollar Swiss. Yeah, I think it moves higher, especially if we continue to close daily closes above this level. Here's what the daily chart looks like, and even a basic slope resistance off the yearly high, 200-day moving average, broke, moved higher. Here we are trying to slide through the median line. Intraday, it's tough. It's tough to try to get this in a new position from here. So, the levels, I'll just highlight them for your consideration if you're in this trade, guys, but I'm not actually, this has fallen off the menu completely for me as far as any new fresh exposure. I need to see a pretty decent setback to get back on the long, or, if we get into the 50 line, we start to see some exhaustion, maybe you play a near-term short back to the median line. But for me, any new exposure from here, you're just chasing. You're just chasing. Okay, last but not least, euro yen, another one that we talked about earlier. Here is, by the way, dollar Swiss. So we've broken through that 98.82 level, and we've even come back and checked it as support. So still looking for that reach towards 99. The euro yen. For euro yen, the only thing I highlighted for you guys was this week was big resistance, 134.28. 134.29. You had the yearly high. Okay. You had the September highs, the high day close, not the high day close, but the high close, and basic slope resistance was all there. So inherently, you don't want to just short right into it, but you want to look for signs of near-term exhaustion. And I think we've been getting it. Momentum's been holding 70, as resistance. Rock solid as we've continued to make higher highs on a closed basis. And again, just to look at this again objectively from the daily chart, you're getting pretty nice reversal day here right off that resistance level. So I do think you risk a little bit more of a pullback in euro yen. Not surprising. You need to see some yen strength. So that's actually would mesh pretty well with our dollar yen short that we want to see move lower. But just be mindful, below 134.30 on a closed basis, I still think this thing is way at risk. Ultimately, it does break higher in my opinion, but as it stands right now, still looks like it could risk a little bit more of a pullback before continuing. Any questions on Euro Yen or anything else that we covered or didn't cover today? Okay, guys, that was a mouthful. I hope I didn't bore you. We're going to wrap it up here. Don't forget, Jamie's up on tap in just a few hours for the midweek strategy webinar. To go over his take on things. As always, we will keep you updated on the squawk heading into tomorrow's GDP release. Again, remember, we're expecting softer numbers for the United States. So the question is, do we miss or beat? Do we hit or beat those soft expected numbers? The risk on the larger scale is if we fall short of the numbers that were already expected to be soft, to give us and propagate, possibly further pullback here in the dollar index. But remember, none of the obvious biases have changed, whether it's for the euro, which continues to hold above support, or the DXY continues to hold resistance. And remember those 2 weekly charts. If I'll leave you with anything for the rest of the week, guys, it's going to be watch the close here in dollar index, watch the close here in euro, and again, obviously, some of the pound major support that we've been looking for above 30.20. All right, guys, we'll wrap it up there. Again, great to see all of you. We'll see you on Monday morning on the free session on Daily FX at 8:30 Eastern for the weekly strategy webinar. And again, back here Tuesday, Wednesday, and Thursday. Best of luck trading. Use some caution. Don't forget the GDP figures numbers tomorrow. I'll have them out for you on SB Squawk as soon as they hit. Cheers.